So we're looking at the debit credit sheet. Erase everything here. Okay, a couple of things to point out with the debit credit sheet. All right, assets or debits? Everybody got that? Assets or debits? They live in a debit world. Liabilities are credits. They live in a credit world. Owner's equity is net credit because we have some things that are credit and debit. Capital is credit because we get the cash and give the ownership. Drawing is a debit because the owner gets the cash and we have to record the debit. Revenue is a credit because we get cash, give the sale, and expenses are debits because we give the cash and get the expense. Now, up here at the top, it says normal balances are highlighted. We worked on that earlier today. The one thing that I want you to remember the most is that like signs increase, opposites decrease. So in the cash account, if I have $100 in cash, okay, if I have $100 in cash, and I add $100 more to it, how much will I have in the cash account? $200, all right? If I pay someone $50 and give cash, how much do I have in my cash account now? $150. So debits increase a debit. The more cash I keep getting, the bigger my cash account is. And then when I give cash, the lower my cash accounts become. So debits increase debits, credits make them go lower. Wow, this is not working properly. All right, let's take accounts payable, for example. Accounts payable is me giving a promise to somebody that I will pay them in the future. So my credit will be $100. I owe you $100. What happens if tomorrow I come back up to you and say, I need to give you another IOU. I'm going to give you another IOU. That's going to make my accounts payable balance increase, right? So now I owe you $200. And then tomorrow I find $50 in my purse and I'm like, you know what, I'm going to go pay my friend. So when I pay cash, I'm going to get part of my accounts payable back. So that means I'm going to credit cash and I will debit accounts payable. Now I have 150 in debt. I did have 200, but because I paid it off, paid $50 of it off, I only owe 150 now. So credits increase credits, debits make credits go down, all right, because they're opposite. This is the credit world, all right? So I want you to think about this as we're going into our next problem. Our next problem is going to be talking about how do the transactions affect the balance sheet. And again, we've talked about this being the balance sheet. This is what generates our financial statements. We have the balance sheet, which is our statement of financial position and statement of net worth. We also have our income statement within here that tells us what we are making for that particular year. All right, so in your book, you need to be on page 10 in your textbook. So if you'll move over to page 10 in your textbook. I don't know that I have page 10 listed. So page 10 in your textbook looks like this. All right. You've got the balance sheet equation that's listed up here. And you're seeing the different transactions, cash received from sales, services sold on account, different transactions. Okay. I think I'm on the wrong page. We should be on page 10, and I had to be on page 13. Okay, there we go. So on this particular page, page 10, all right, we paid cash for supplies. Here's the transaction. All right, paid cash for supplies. We got supplies, we gave cash. Supplies is our debit, cash is our credit. Now, debits in a debit world, okay, assets are debits. We're going to put a DR here. Liabilities are credits. Owner's equity is a credit. If we put a debit in a debit world, we got supplies. It's going to make the assets get bigger. We are giving away cash because we paid cash. A credit in a debit world makes it go down. Everybody see that? All right? This transaction 3 said we paid cash for insurance. I got insurance. I gave cash. Insurance is a debit. A debit in a debit world is a plus. I gave cash. That's a credit. A credit in a debit world is a minus. So like increases, debits increase debits, credits increase credits, and opposites decrease. A credit decreases a debit, and a debit decreases a credit. Okay? So everybody good with that? All right, let's move on to the next page. You also notice too, real quickly, that a negative 275 and a plus 275 equals 0. So a 0 on one side of the equation equals a 0 on the other. So notice that if we keep everything on the debit side, a plus and a minus equals 0. There is a 0 on the other side of the equation. Okay, let's look at this one. We bought supplies on account. Let's talk about how this is affected. All right. We bought supplies on account. So we got supplies and we gave an accounts payable because we have to pay it. All right. Do a T account right up here for you to look at. My debit, my credit. I got supplies. I can't write very well on the screen. And I gave an account payable. A debit in a debit world increases, correct? And a credit in a credit world increases. I have 500 equal to 500. Does it balance? Yes. Okay. A little while later, I'm going to pay cash on account to Supply Depot. All right. My journal entry is I'm going to give cash on account. So what is happening is I'm giving cash. Why am I giving cash? Because I'm going to get back some of my account payable. I'm paying off my IOU. So a credit in a debit world is a minus. A debit in a credit world is a minus. Does a minus 300 equal a minus 300? Yes. Okay, let's work on our problem. So if you will scroll down to, I think it says This is page 13. Okay. This will be in your virtual textbook that's included in your module. I'm going to use my real textbook while I do this and just work on the problem with you guys. There we go. Okay. So in our book, on page 13, it says we bought supplies on account. Does everybody see that on page 13 in green problem? That should be on your virtual textbook, digital textbook that's in your model. All right. The way that it helps me is to use a T account. The T account helps me because I can visualize what is happening. So this is my debit, which is my get, and my credit, which is my give. All right, and I'm going to go ahead up here and just remind myself that assets are debits, liabilities are credits, and owner's equity are credits. Okay, just reminding myself of this. Those of you that are in my face-to-face classes, you have this as a working paper. It's the Work Together 1-2, or you can do it here in the computer, either way. So what did I get? I got supplies. How did I get them? I gave an account payable. Are you with me? Can you see around me? Okay. All right, so do your T account. That helps you. So supplies is a debit. A debit going into a debit makes a bigger debit, right? Accounts payable is a credit. A credit going into a credit is a bigger credit. Does that make sense? So does a plus equal a plus? Now, if I had dollar amounts out here, it would be the same as putting 275 and a plus 275 on the other side. So we can do it with plus signs or minus signs. We can do it with numbers. Doesn't matter. The point of this lesson is to understand that debits are increased by debits, credits are increased by credits, and the opposite decreases. Okay, number 2, I received cash from owner as an investment. All right, what did I get, Creed? I received cash from owner as an investment. It's an asset, but what specific asset did I get? Cash, exactly. So I got cash. All right, why did I get that cash, Khalil?
Because you received it from
from the owner. Okay, and what is the owner account called when they put money in? You're right. Capital is exactly right. So capital. Okay. So cash is an asset. An asset debit increases an asset. A debit increases a debit. Capital is credit. A credit in a credit world makes the credit get bigger. So does a plus and a plus equal? See, you can't have a plus and a minus because they don't equal, but you can have a plus and a plus. You can have a plus and a minus on the same side, but you have to make sure that both sides equal. All right, I have paid cash for insurance. Who'd like to tell me what I got and what I gave? What did I get? Paid cash for insurance. Was it my get or give? I paid cash.
You gave cash, but it was to prepay insurance.
Right. So I'm going to get insurance, and we're going to call it prepaid. That's what this book calls it. And I'm going to give cash. Okay? Everybody follow me there? And if you look at your handy dandy cheat sheet, which is here, Prepaid insurance is a debit. It is an asset. So a debit in a debit world is a plus. It makes it get bigger. Cash is also an asset, but it's a credit. We're giving it. So that means we have to minus. So we have a plus and a minus. If I have a +5 and a -5, what does that equal?
0.
+5 -5. 0, right? So does 0 equal 0?
Well, yeah.
Yeah, it does. 0, a plus and a minus of anything is 0, and that equals 0 on this side. So that's what 3 looks like, okay? And then question number 4 said paid cash on account. So I know that I gave cash. Why am I giving people cash? Because I'm going to pay off my IOU, so I'm going to get my account payable back. So I am giving cash, and I'm going to get my account payable back. Okay? So a debit in a credit world is a minus, and a credit in a debit world is a minus. Everybody good with that? Okay. I want you to try the on your own 1-2. The best thing for you to do is to draw your get and give chart with your debit and credit. Refer to your accounts that are here and tell me what you get and give. And then if it's a debit going into a debit world, it's a plus. And if it's a credit going into a credit world, it's a plus. Opposites decrease. So you're going to do the same thing that I do with this problem. I think you may have to add like a number 5 here and fill it in. But I want you to try it and then upload it. Okay?
What page?
You're on page 13 in the textbook.